Anglo American rejects a $74 billion bid from BHP but leaves the door ajar for more talks. Prime Minister Anthony Albanese launches a new national battery strategy, and a Senate inquiry is told banks could charge $370 million more in fees if forced to keep branches open in the bush. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Friday, the 24th of May, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up with one of our favourite economists, Carlos Cacho, Chief Economist at Jarden Australia.
Yes, we're talking about immigration. Carlos is very across the immigration debate here. It's become a political debate between the two parties, but it's also a very, very big economic debate. And we talk about whether immigration is good or bad, what it means for growth, but what it means for housing, short term, long term. It is a fantastic chat. So if you're interested, not just in economics, not just in immigration, but even social policy, this is well worth a listen.
Yeah, absolutely. Couldn't agree more. It's coming up after the show. Stick around for that one. The main story this morning, though, Sean, is a big one. Anglo American has rejected a $73.9 billion offer from BHP, but has left the door open for further talks, granting the big Australian a 1-week extension to come up with an improved bid.
And that would be a fourth bid. Anglo American told the London Stock Exchange early yesterday morning, Australian time, that BHP had this week made a third non-binding and conditional takeover bid that was 9% more generous than the second bid last week. But it was based on the same structure that the Anglo board had previously rejected, including selling off some South African-based assets. British laws forced BHP to make a firm offer or abandon its bid, but Anglo has asked for a 1-week extension. Anglo's largest shareholder, the South African state-owned Public Investment Corporation, appears to support the Anglo board at this point, but it will come down to price. BHP is obviously very keen, and the Anglo board is squeezing as much as it can, as it should.
So how's this going to play out, Sean? What's actually going to happen here? Will BHP get Anglo, do you think?
Well, BHP has until May 29 to lob a binding offer after what happened over the past 48 hours. Basically, it has 7 days to convince Anglo to accept the deal. And, it is arguing the case is not particularly onerous. It's not particularly complex. Anglo has said otherwise. BHP reckons it has made progress, just not enough progress, and management says it won't bid any higher. The key issue is a divestment of controlling stakes in two Johannesburg-listed mining companies, Kumba Iron Ore and Anglo American Platinum. Basically, I think BHP is worried about the sovereign risk about having assets in that country. The deadline extension is definitely positive for BHP. It now has a nibble. It hasn't quite caught the fish, though, and I think that's where we're up to. BHP share price closed down about 2.5% yesterday.
There's a joke here to be made about anglerfish.
Michael, only by you.
I know, and the problem is that I've put this out there now, and it's a half-formed thought, and I kind of wish I could retract it. Anyway, I'm sure I'll come up with something.
You're good.
Sean, how did local markets perform yesterday?
The S&P ASX 200 closed down almost 0.5% to 7,812 points. Tech stocks did well, while the big miners went backwards. BHP led the way down. Rio Tinto, Fortescue Metals and Wesfarmers were all sharply lower. National Australia Bank was the worst of the banks. On the positive side of the market, CSL did well, jumping 1.4%, as did Transurban. Telstra was up 1.1%. In corporate news, Michael, Nufarm dropped 7% after a slump in profits and revenue in the face of, and I quote, challenging conditions in its latest half-year report. And Xero reported surging revenue for the 12 months to the end of March, sending its share price up nearly 9% yesterday, the best on the day.
All right, taking a look overseas now, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. What's happening in international markets?
Minutes of the Federal Reserve Interest Rate Setting Committee show that some members are prepared to raise interest rates if inflation becomes more aggressive. The prospect of a rate cut has improved on the back of weaker inflation data, but those minutes show that the Fed isn't scared to lift rates if it has to. That's one of the main reasons markets were down yesterday. Otherwise, gold and oil were both a bit lower. The Aussie dollar's buying just over 66 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has launched a national battery strategy to help fund a locally made batteries industry to support a renewable energy grid.
The Prime Minister says Australian firms have competitive advantages in cleaner, safer, more cyber secure batteries adapted to local conditions. In last week's budget, $523 million was allotted to the initiative. The goal is that by 2035, Australia will be a globally competitive producer of batteries with a focus on grid-level utility products and those powering businesses and households. Under the strategy, there are 5 key priorities, boosting local manufacturing being one, and others building knowledge and skills. There's securing a plan in global battery supply chains, also leading the world on sustainability standards and the circular economy, and finally bringing all levels of government together to collaborate. You can't complain, it's not ambitious.
And the other big news in the energy sector, Sean, the New South Wales government will extend the life of Origin Energy's Eraring coal-fired power station for at least 2 more years until August 2027. Now, this is at a cost of up to $225 million a year after warnings the shift to renewable energy has fallen off track.
Yes, under the deal, Origin will seek to generate a minimum of 6 terawatt hours a year. That's about 3% of total generation in the eastern states' national electricity market from the giant plant on the shores of New South Wales Lake Macquarie. According to media reports, Origin will pay a fifth of any operating profits up to a maximum of $40 million a year should the plant operate at a profit during the expansion period. That money, of course, goes to the government. But if Eraring is run at a loss, Origin can call on the state to subsidise the plant's operating and capital costs.
Now, Sean, I mentioned this next one at the top of the show. This is quite incredible. Australia's 5 biggest banks would charge customers an extra $370 million in fees and interest rate increases if the government were to enforce a higher levy on them to keep rural banks funded and open, according to new estimates.
Yeah, so the costings come ahead of a Senate probe into the impact of branch closures on regional communities. Senator Matt Canavan, the Deputy Leader of the Nationals in the Upper House, asked the Parliamentary Budget Office to do some work, add 10% to the current bank levy to fund community banks. According to the Financial Review, the office said it would raise about $496 million between 2024 and 2027. The Parliamentary Budget Office then said that consumers would end up getting stuck with about 75% of that $496 million. The banks would carry the rest. That came down to $370 million. Commonwealth Bank, Westpac and National Australia, of course, have deals with Australia Post to provide banking services through post offices. That's their way of making sure they've still got services in the bush. ANZ hasn't done that. ANZ reckons that it's too expensive to do that. But it's just interesting that if the banks are to do it, then an independent voice here is saying customers could end up having to pay the $370 million over 3 years.
Sean, the 2 cases of bird flu in Victoria, one in a child, have triggered fears that the virus could spread locally, disrupting the rural economy.
Australia is the only continent whose animals haven't been affected by the bird flu outbreak yet. This week, Australia reported its first human H5N1 bird flu case in a child infected after a trip to India. The child made a full recovery, thankfully. A separate H7 bird flu strain was also detected at an egg farm near Melbourne. Now, Victoria's Chief Health Officer, Claire Looker, said contact tracing had not uncovered any other transmissions. Meanwhile, in the state of Michigan in the US, bird flu has been spreading widely in cattle herds, while a dairy worker has also contracted the virus. There's now been 8 human cases worldwide this year. Disease control regulators are obviously calling on people with regular exposure to animals to take precautions. Given what we've been through in the last 4 or 5 years, this is a worrying development.
The communications regulator is suing Optus for allegedly not protecting customers' confidential information ahead of the September 2022 cyber attack.
The Australian Communications and Media Authority filed proceedings in the federal court claiming Optus failed to protect the confidentiality of personally identifiable information of its customers from unauthorised interference or access. It is the latest legal battle for Optus, which is fighting to stop a report commissioned from Deloitte into the 2022 attack from being released publicly. A class action brought by Slater and Gordon is asking for that report, but Optus isn't doing that thus far.
News Corp will allow artificial intelligence company OpenAI to show news content from more than a dozen of its publications when people ask questions in ChatGPT. This is a big development.
Yeah, so the deal could be worth more than 250 million US dollars over 5 years, according to the Wall Street Journal. The rise of AI chatbots has pretty much shaken the news industry as much as the internet did. Chatbots such as ChatGPT and Google's Gemini were trained on text scraped from the web, including news articles. Of course, no payment, no permission in those. The tools also answer people's questions directly, increasing concerns that people will simply get their information from the big tech chatbots instead of paying journalists to report and write the news. According to the Washington Post, some organisations, including the New York Times and the Chicago Tribune, have sued OpenAI for scraping their articles. Other publishers, including Politico parent company Axel Springer, the Associated Press and the Financial Times, have signed deals with OpenAI. That's what news is doing. It's kind of one of the big debates in the journalism world right now.
Wow. And finally, Sean, before we get to international news, well, this one kind of straddles both, really, doesn't it? Shareholders in Virgin Money, Britain's sixth largest bank that's actually listed here on the ASX as well, have voted for a $5.5 billion takeover offer, and the group is going to leave the local exchange.
Building society nationwide will buy Virgin Money, which is listed here and in London. About half the shareholders are Australian-based. Now, Michael, I know you're asking why, but why would a British bank be listed in Australia? Excellent question.
That was
done.
Exactly. I was asking it with my eyes, Sean, not with my mouth.
You were.
Yes, I was asking it.
That's right. So Virgin Money was created by the merger of Virgin, UK-based, and Clydesdale and Yorkshire Banking Group, obviously UK-based. That happened in 2018. But Clydesdale and Yorkshire was owned by National Australia Bank. And it was spun out in 2016 when NAB exited Britain. So NAB shareholders all got stock in Clydesdale and Yorkshire. Hence, it's listed here.
I love the fact that you're now asking yourself questions during the during the
I'm
show.
worried that you won't.
Yeah, it feels as though you are trying to replace me, not with someone else, but just with yourself. You're like,
Well, look,
if I could just ask myself the questions, goodness me, that would be a great show.
I have never seen a moderator like you, Michael. So over the last couple of days, you and I have been attending the Mumbrella 360 conference. It's been a fantastic time. And one of the sessions that you were moderating, you actually asked 4 questions in one. Then you pulled yourself up and said, I think I've just asked 4 questions in one. And then the respondent, it was about data, and the respondent said, look, I think I can remember the questions. And you went, actually, I can't remember the questions. It was a very funny moment.
It was very much just it was a stream of consciousness kind of question. Anyway.
Hence, I'm asking some of the questions on this show now.
That's right. You have relieved me of my duties. I've got a couple more questions to ask you, Sean.
Okay.
In international news, this is a big one. The Brits are going to the polls on July 4 after Prime Minister Rishi Sunak announced a surprise election, though his chances of winning look a little slim, wouldn't you say?
Yeah, he's about 25 to 1 at the moment, which isn't good in a 2-horse race.
No, it's not great.
Mr. Sunak hopes the 6-week campaign can bridge the 20 percentage point gap in opinion polls. That is massive. He called the election outside 10 Downing Street, as is tradition, in the pouring rain, as I think is appropriate in this instance. Many Tory MPs are not happy with the announcement, suggesting the Prime Minister should wait until the economy's looking better. Division within the Conservatives, of course, is not particularly unusual, not over the last few years anyway. His opponent is Labor's Keir Starmer. Now, I'm sure we're going to hear lots about Keir Starmer, not just in the next 6 weeks, but potentially the next few years, because he is hot favourite to win. The last election was in December 2019 when Boris Johnson was elected. He was forced out, too many COVID parties, I think, and replaced by Liz Truss. Ms. Truss lasted 49 days, although that did include a disastrous economic recovery plan. She also holds the honour of being the shortest-serving British Prime Minister. Mr. Sunak took over in October 2022, goes to the polls on July 4.
This next one is absolutely remarkable, Sean, and I'm going to reserve it now for the weekend edition tomorrow.
Okay.
Record sales of artificial intelligence chips sent NVIDIA's revenue soaring 262% in the past quarter. That's ahead of already lofty expectations. And get this, the group expects growth to continue with the launch of a new line of chips.
CEO Jensen Huang said the company would see a lot of revenue from its new Blackwell chips this year as it profits from exploding demand for the computing power behind generative AI. According to a report in the Financial Times, demand for NVIDIA's AI data center graphics processing units has surged over the past year as big tech companies rush to develop the computing infrastructure needed to deliver AI products at scale. For the March quarter, Nvidia was making about $29 million a day in revenue. Quite incredible. Its shares are up around 90% this year, jumped 6% in after-hours trading yesterday to push through $1,000 a share for the first time. The company also announced a 10-for-1 stock split.
And finally, Sean, Spain, Ireland and Norway have committed to recognising Palestinian statehood next week, sparking a severe reprimand from Israeli Prime Minister Benjamin Netanyahu.
Mr. Netanyahu released a video calling the intention to recognise a Palestinian state a reward for terrorism. There are now 27 EU members that recognise Palestinian statehood, though significantly France does not. It is significant because Arab and Palestinian officials said recognition of a Palestinian state is crucial to a long-term solution in the region. Now, Australia, along with the US, Canada, Japan, South Korea, a bunch of others, do not recognise Palestinian statehood. It comes as nations are split over a move by the chief prosecutor at the International Criminal Court to seek arrest warrants for the leaders of Israel and Hamas.
All right, up next is the Fear and Greed Daily Interview. You're speaking today with Carlos Cacho, Chief Economist at Jarden Australia.
All about immigration, what it means for the economy, whether it can fix the housing crisis, things like that. Very, very fascinating chat.
Yeah, it sure is. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you should sign up for the Fear and Greed newsletter. It comes out next Wednesday, so do it today. Then you don't have to worry about it again. And next Wednesday morning, you will get an email laden with Sean's innermost thoughts on all of the business news topic, which actually sounds quite enticing, don't you think, Sean?
No, not really. But I mean, I live with my thoughts, so I'm a bit sick of them.
It frightens you that we've actually agreed to put out an email containing them.
Yes.
Just a wee bit. All right. Thank you very much, Sean.
Thanks, Michael.
It's Friday, the 24th of May, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.